Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. The new road for Doge. The Dogecoin Foundation reveals a trail map for the original meme coin. What does it say? First, Testnet, merge next. Ethereum inches closer to its transition to proof of stake with the Kintsugi testnet. When could we see the merge? Terra's towering TVL. Terra becomes the second largest cryptocurrency by total value locked as UST overtakes DAI as the largest decentralized stablecoin. How much higher can Luna go? BNB Auto Burn. Binance Coin's tweaked tokenomics could take BNB on a tear. Everything BNB holders need to know. Dubai's crypto ambitions hit a new high. A new hub is created to attract crypto projects from around the world. Which other countries are crypto holders heading to? NFT Madness mounts. PricewaterhouseCoopers purchases digital land, Kraken looks to make an NFT marketplace, and Meta looks to integrate with cryptocurrency. What comes next for this NFT niche? Telegram to integrate Toncoin. The cryptocurrency originally created by Telegram comes home. Will we see regulators push back this time? The SEC's anti-crypto spree. The SEC rejects 2 more spot Bitcoin ETF applications as one of its pro-crypto commissioners announces he is stepping down. Does this mean a spot Bitcoin ETF won't be approved? And a closer look at what comes next in this week's crypto market forecast. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Last week, the Dogecoin Foundation released the highly anticipated Dogecoin Roadmap, which is colloquially referred to as the Trail Map. The Trail Map has been in the works ever since the Dogecoin Foundation re-established itself in August, and it consists of 8 milestones. The first milestone is a makeover of the Dogecoin website, including the addition of a Dogepedia section. Devs expect to deliver both by the end of January 2022. The second milestone is the establishment of a Dogecoin code library called the libDogecoin, which will allow developers to easily create Dogecoin-compatible protocols. This ties into the third milestone, to establish a Dogecoin standard, which will simplify the Dogecoin development process by introducing a handful of features, including a Dogecoin improvement proposal process. The third milestone will facilitate the fourth milestone, which is the creation of the GigaWallet, a quote, enterprise-ready Dogecoin wallet that will make it easy for institutions to integrate Doge payments. The fifth milestone is the development of a Dogecoin app and SDK, which will make it possible to customize GigaWallet settings, specifically in the realm of private key custody. According to the Trail Map prologue, libDogecoin and the GigaWallet will be rolled out in the next few months. Now, the sixth milestone has yet to be detailed, but sounds like an integration with Elon Musk's Starlink satellite system and the use of radio nodes to secure the Dogecoin blockchain. The seventh milestone is the introduction of a proof-of-stake version of Dogecoin, whose development will be guided in part by Ethereum co-founder Vitalik Buterin. The eighth milestone likewise lacks details, but appears to foreshadow a future Layer 2 scaling solution for Dogecoin. Now, unfortunately, there are currently no timelines for the final 3 milestones, but the Trail Map prologue suggests development on all 3 will begin by the end of next year. The endgame of the Dogecoin roadmap is to create new use cases for Doge because it will further incentivize adoption. This has basically been Ethereum's strategy since its inception, and it's safe to say that it's been a successful one so far. As many of you will know, Ethereum has many upcoming milestones of its own, and the most significant of these is the transition from proof of work to proof of stake in a process called the merge. Over the last few months, Ethereum developers have been laying the groundwork required to ensure the merge goes as smoothly as possible, and the latest iteration of this initiative is the Kintsugi testnet. As explained by Ethereum developer Tim Bako, Kintsugi makes it possible for developers to further stress test the proof-of-stake version of the Ethereum blockchain. Once this has been done, Ethereum developers will deploy the final round of testnets before officially beginning the merge. Although an exact date for the merge has yet to be revealed, Ethereum developers have been regularly updating a mainnet readiness checklist on GitHub. Now, this checklist suggests that we are anywhere between half to 3/4 of the way to the merge, and I'll leave a link to the checklist in the description if you're interested in keeping up. If you've been keeping up with the Coin Bureau, you might recall that the merge was originally scheduled for the end of 2021, as per the Ethereum 2.0 website. This was delayed to 2022 after a series of bugs were discovered, and many now believe that the merge is likely to occur at the end of Q1 or sometime in Q2. If you want my take on what the merge could mean for the price of ETH, you can check out my video about that using the link in the description. Anyways, another smart contract cryptocurrency that's been making the headlines lately is Terra, whose Luna coin recently hit an all-time high of over $100. This is due to the overwhelming demand for UST, a decentralized stablecoin pegged to the US dollar, which can be minted using Luna. The demand for UST is coming primarily from Terra's next-generation DeFi protocols, whose total value locked recently surpassed $20 billion, making Terra the second largest chain by TVL. Nearly half of this TVL is locked in Terra's Anchor protocol, which makes it possible to earn a stable annual interest rate of close to 20% on UST. This high APY is achieved through a combination of lending and staking on multiple cryptocurrency blockchains behind the scenes. The demand for UST is also coming partially from the increased risks associated with holding centralized stablecoins such as USDT and USDC. Aside from the regulatory pressure centralized stablecoins have faced as of late, centralized stablecoin issuers such as Tether and Circle have a history of freezing wallets on the request of authorities. As I mentioned in my recent portfolio update video, I switched from USDC to UST for these and other reasons, and hold the remainder of my dry powder in PAX-G as a hedge against inflation. Now, in any case, as a consequence of all this demand, UST managed to flip DAI by market cap to become the largest decentralized stablecoin in cryptocurrency. What's more is that UST now exists on more than half a dozen smart contract cryptocurrency blockchains, the most recent being Near Protocol, whose Near coin seems to have pumped on the news. Despite repeatedly hitting its head on that $100 mark, Luna is still looking strong and could continue to rise. This is mainly because of a recent upgrade, which sees a portion of all the Luna used in UST conversions permanently destroyed. Put simply, the more UST is minted, the more Luna is temporarily and permanently destroyed. As basic economics dictates, less supply with the same or more demand equals an increase in price. This supply and demand dynamic is something that cryptocurrency exchanges are acutely aware of, which is why almost every single exchange token features a burning mechanism of some kind. The largest exchange token is Binance's BNB coin, and at the end of every quarter, Binance was buying back and burning BNB using a portion of trading fees which would tend to cause a price pump. From now on, however, BNB will be automatically burned according to an equation which factors in the price of BNB as well as the number of blocks produced on the Binance chain each quarter. Now, because I am useless at maths, I'll just show you the graph. As you can see, it looks like around 1.5 million BNB will be burned next quarter, assuming the price of BNB stays in the $500 to $700 range. Note that this auto burn is in addition to the partial fee burns introduced to the Binance Smart Chain earlier this month, with the approval of BEP95, a protocol upgrade analogous to Ethereum's EIP 1559. As I mentioned in my video about exchange tokens, BNB burning will continue until its total supply hits 100 million. With BNB's total supply sitting at shy of 167 million currently, a 40% reduction in supply would correspond to a 40% increase in price, all else being equal. Now, as amazing as this sounds, it's worth pointing out that it's going to be a few years before we see BNB burn itself down to its 100 million supply, and that's an optimistic timeline. How quickly we get there ultimately depends on the demand for and utility of BNB, and that's been one of the many areas of focus for Binance over the last year. Besides BNB, Binance has been focused on forging new partnerships with public and private institutions, something that's been partially driven by relentless regulations. This seems to be one of the primary motivations behind Binance's decision to join the recently established crypto hub in Dubai. For those who don't know, Dubai has become a welcome home for crypto holders and crypto companies alike. This is primarily due to the fact that Dubai has next to no tax, and the United Arab Emirates itself has been much friendlier to cryptocurrency than most other countries. Dubai's latest pro-crypto move comes from the Dubai World Trade Center, a government-owned organization which will set comprehensive rules and regulations for cryptocurrencies in the emirate. The Dubai World Trade Center stated that it will look to work with crypto companies to set these rules and regulations, which is likely another reason why Binance became one of the first crypto companies to join. Now, crypto companies cozying up to regulators to set regulations is nothing new. And if you watch my recent video about the crypto CEO hearing, you'll know that FTX and Coinbase seem to be doing the same thing in the United States. While this method may be problematic, there's no denying that this kind of influence is good for cryptocurrency, and it has arguably facilitated the creation of crypto havens in other countries around the world. One of these is, of course, El Salvador, where BTC is legal tender, residence is easy to acquire, and there are no taxes on crypto gains. Portugal has also emerged as a preferred destination for crypto enthusiasts, given that there are no taxes on crypto gains nor on income earned from foreign sources. Now, if neither of these two countries appeals to you, consider checking out my video about the top 10 countries for crypto holders. You should also watch my video about optimizing crypto tax since we're approaching the end of the year. So links to both will be in the description. Now, one thing that I forgot to mention in my video about crypto tax is that there is a high likelihood that you must pay capital gains on any NFT sales the same way you would with regular cryptocurrencies. So be sure to check this with an accountant before you get wrecked. Speaking of NFTs, the Hong Kong arm of Big Four accounting firm PricewaterhouseCoopers has purchased parcels of land within the Sandbox metaverse. PwC Hong Kong intends to build a virtual office space where it will provide its accounting services to metaverse users. Now, the amount of land, the location of the land, and the amount of money PwC paid for the land has not yet been revealed, but should be known in the coming weeks. The only thing crazier than PwC's land purchase is Kraken's plans to create an NFT marketplace which will accept NFTs as collateral for loans. The crossover between NFTs and DeFi is one of the many things Messari says we will see more of in 2022, and you can see what else Messari predicted using the link in the description. What Messari didn't predict, however, is that Facebook, aka Meta, will make its metaverse interoperable with cryptocurrency, something that Meta's incoming chief technology officer hinted at in an internal post. Interestingly, Meta's soon-to-be CTO noted that, quote, while most people are happy to use Facebook and Google, some are not, and those that opt out are disproportionately involved in creating a genuinely impressive wave of technology. Now, this is interesting because it seems to imply that Meta's main motivation for integrating with cryptocurrency is to attract cryptocurrency developers, something that its crypto project Libra and crypto wallet Novi have had a hard time doing. It's not known which cryptocurrencies Meta will look to interoperate with, if any, but history suggests it's likely that Meta will receive a lot of backlash from regulators if it chooses to go down that route. Believe it or not, but Meta was not the first big tech company to face regulatory backlash after trying to issue its own cryptocurrency. One of Meta's many predecessors in this regard was none other than Telegram, which tried to issue its own cryptocurrency called Gram, which would live on a blockchain called the Telegram Open Network, created by one of Telegram's co-founders. The Gram ICO reportedly raised a staggering $1.7 billion in 2018 before being shut down by the SEC. Had it been allowed to proceed, it would have been the biggest ICO in cryptocurrency by a very wide margin. In the spring of 2020, the Telegram Open Network was revived by a new community of developers as the Open Network, and the Toncoin cryptocurrency began trading on exchanges earlier this year. Now Telegram has announced that a donation bot in its Messenger app will accept Toncoin, opening the door to a full app integration in the future. Now, if you're wondering why this is so significant, it's because Telegram has over 500 million monthly active users and is arguably the most popular messenger app among crypto holders due to its commitment to privacy and free speech. The Signal messenger app is also popular among crypto holders for the same reasons, and Signal announced its own crypto payment integration with MobileCoin earlier this year under similar circumstances. In both cases, the crypto projects have shared histories with their respective messenger apps, yet are technically and legally independent from them. As such, it will be interesting to see how regulators around the world will react, especially the SEC, which hasn't been all that kind to cryptocurrency in the United States. The SEC's latest anti-crypto move was the rejection of 2 more spot Bitcoin ETF applications, this time from Valkyrie and Cryptoin. Earlier this month, the SEC rejected WisdomTree's spot Bitcoin ETF application, meaning there are only a handful of spot Bitcoin ETF applications left in the tray. 2 of these come from Grayscale and Bitwise, and the SEC has postponed its decisions on both to early February. As I mentioned in my weekly newsletter, I take this as a sign that the SEC may very well approve one or even both applications, because otherwise it probably would have just rejected them like all the others it has over the last couple of months. The only problem with this prediction is that only 2 of the 5 commissioners at the SEC are openly pro-crypto, and one of them has just announced that he'll be leaving at the end of January. If you watched my video about the SEC's views on cryptocurrency, you'll know that Elad Roisman has worked closely with Hester Peirce on many occasions to push for pro-crypto regulations. Hester is, of course, the other pro-crypto SEC commissioner. Now, the exact reasons for Elad's departure are unknown at this time, but the biggest question is whether his replacement will share his pro-crypto stance. With some luck, Elad will stick around for long enough to push for the approval of a spot Bitcoin ETF, and you can learn more about what effect that could have on BTC by using the link in the description. Now, turning to the charts, we can see that the bullish divergence I spotted between BTC's price and RSI last week seems to have played out. We are now comfortably above the 200-day moving average, which is a significant zone of price support. More importantly, BTC's price is painting a small bull flag in the short term and an inverse head and shoulders in the medium term, which could mean that we're on the cusp of a bigger breakout to the upside with a target of around 55k in the short term. This week's winners are Near Protocol, Phantom, Aave, Oasis Network, and Cosmos. A solid list, if you ask me. As I mentioned earlier, Near Protocol's Nearcoin appears to be pumping on the news of its integration with Terra's UST stablecoin. If you watched my recent Near Protocol update, however, you'll know that fundamentals for Near Protocol have been building up for quite some time. And if you watched my aforementioned video about Messari's 2022 crypto predictions, you might also remember that Near is one of the most popular cryptocurrencies among institutional investors. Don't get too caught up in the FOMO though. The chart suggests that Near is just about done pumping, and we could see it drop as low as $12 to $13 in the days ahead as it enters another consolidation phase. It's a similar story with Phantom, whose FTM coin pump is fundamentally due to the massive increase in total value locked its various DeFi protocols have seen over the last few weeks. One of Phantom's DeFi protocols also completed a cross-chain bridge between Phantom and Solana for the USDC stablecoin, potentially attracting liquidity from one of Ethereum's top competitors. Now, it's a win-win for me since I hold both FTM and Sol. FTM is looking strong on the charts, but the RSI suggests it's starting to run out of steam. We're also approaching a significant zone of resistance around the $2.60 mark, so be on the lookout for that if you hold FTM too. Aave's pump, on the other hand, seems to be getting started. It's been caused by the news that a Swiss bank called SIBA will be integrating the institutional version of the Aave protocol to allow its clients to do DeFi in a compliant manner. If you've been keeping up with Aave on Twitter lately, you'll know that Aave has been pushing for the institutional adoption of its protocol, and there have been multiple community proposals tabled to that end. The SIBA Bank was no exception in this regard. Now, even though Aave is a bit overextended on the daily, the weekly chart reveals that it has the momentum it needs to break through the zone of resistance at the $300 mark in the coming weeks. I suspect Aave will start to stutter around the $400 mark, which is its next zone of price resistance. As for Oasis Network, the closest thing that I could find to a cause for the Rose Coin's recent pump is the release of AI Rose NFTs, an apparent Christmas gift to the Oasis community. On the technical side, Rose's rise came from a cup and handle pattern that's been in the works since December the 1st, and if my measurements are correct, we should see Rose hit 40 cents in the not-so-distant future, which is on par with its next zone of price resistance. And last, but certainly not least, we have Cosmos, which is admittedly one of my favorite cryptocurrencies. If you're subscribed to my weekly newsletter, you'll know I also hold Atom as part of my crypto portfolio. That's because Cosmos's MO is interoperability, and the Cosmos SDK was used to build billion-dollar blockchains, including the Binance chain and Terra. Atom's rise is therefore no surprise, and the origin of its current price action has its roots in the continued development on Cosmos's inter-blockchain communication protocol and the release of a 2022 roadmap, which I'll leave a link to in the description. Atom's price action looks eerily similar to Aave's in that its weekly price momentum is massive. If we see a repeat of what happened in May, it won't be long before Atom sees another all-time high. Now, if you want to learn more about Cosmos, you already know that I have a video for you down below. Link in the description. And that's all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, folks, you know what to do. Hit that like button, subscribe button, and bell icon too. If you want more of me, head on over to Twitter, TikTok, and Instagram to get a sneak peek behind the scenes. If you join my Telegram channel, you'll get the daily crypto updates you crave, and signing up for my weekly newsletter is a great way to get the tools, tips, and tricks you need to get paid. And of course, you can support the channel by heading over to the Coin Bureau merch store and picking up a shirt or hoodie or both. Links to all these resources are in the description. Thank you so much for watching, and I'll see you all in next week's episode.